So in a typical day on the trading desk, it begins actually quite early in the morning. We'll have a group of traders that come in around 4:30 in the morning. They come in when it's still dark, no one else is really in the building, and they begin to make phone calls to the parts of financial markets that are already awake and fully running. So typically we're calling London and Frankfurt, Japan, starting to find out how conditions are in trading markets. And in particular, we'll be reading, of course, news lines, headlines coming out over the different wires to see if there's been any market-making news that might be driving the price action that we're observing. And what we're really looking for is to try to understand why are key markets responding in certain ways. So if we see German bonds yields rising, we'd like to understand why are they rising? What are the fundamental reasons that we see this movement? And then to try to think about what would that be, what would that view, if there's a fundamental reason to see German bond yields rising, what would be the consistent view across all asset prices? Are we seeing something similar in other sovereign bond markets? Are we seeing something moving in equity markets? Typically, we also try to think a little bit about the context of these moves. Are they large moves, or are they moves that we see daily and really something that we're expecting every morning or every season? So after we do a little bit of market intelligence gathering, we'll meet around 8 in the morning to have a discussion with the entire desk, which can be as much as 60 people, to talk about what we're seeing and think about what are the right questions to investigate over the day. Now, we're thinking in particular about our audience, who are generally other Federal Reserve presidents and staff at the Board of Governors. And what we're trying to do is help them understand whether or not markets are functioning in a normal way. Are transactions happening at the right, at market clearing prices, at volumes that are typical for this time of day or this time of year, or given the information we have? And if we do see something atypical, how important is it? So in addition to watching all the price action on Bloomberg screens, for example, we're also talking to traders and strategists to get their take on the markets. And this is pretty much what we do throughout the entire morning. And we have a group of strategists, each of whom has a specialty function. So there will be a team of people who are specializing in treasury markets, but some will specialize in looking at the short end of the treasury market versus the long end of the treasury market. And they will all come together at this 8 o'clock meeting to try to discuss what they're observing. Throughout the day, our main objective is really to understand how the markets are trading and whether they're functioning normally. So in addition to this 8 a.m. meeting where we have to try to collect our thoughts, we actually present them in a more formal way around 9:30 in the morning to the Board of Governors. After that, we have another round of market intelligence gathering, which involves calling and reading reports and trying to deep dive into markets, understand what about the plumbing of the market might make it vulnerable to some perhaps bad effect, or what might make it invulnerable and make it resilient to any shocks that we might expect. And then we gather again at noon to have another discussion for what we have for an afternoon call that we have again with the board, where we share our thoughts on how the markets have been progressing. So throughout the day, we're essentially doing a lot of market monitoring for these twice-a-day conference calls with the board. In addition to that, we're writing reports throughout the day as well. We have staff that are writing either short-term updates on what's going on in the equity markets or in corporate bond markets, and we're looking to see if we have any inclination of what market participants are expecting, because expectations are hugely important for the Fed in thinking about the course of the economy. Obviously, expectations about prices are important, but their expectations about growth are also important. Expectations around the stability of markets or the fragility of markets is also important. So we spend a lot of time on the phone actually talking to traders and strategists and other people who work within the financial market, just to get their views on both the short term and the long term. Ultimately, the day is wrapped up around, I would say around 6 to 6:30, when the markets are finally closed and we've written the last briefing. We go home and we have another team that's set to come in at 4:30 in the morning. So we have this rotating schedule of people that are obliged to come in every day, but the day is actually fairly long for us, since we try to cover the closing of Japan as well as the the middle point of Europe all the way through the U.S. session.